All of these big financial institutions are vying for a spot Bitcoin ETF, which is different from a Bitcoin Futures ETF, which already exists on the market. So let's learn about what a regular old ETF is fundamentally. What is an ETF? ETF stands for Exchange Traded Fund, and that's just a fancy term for a financial product investors can add to their overall portfolio. Breaking down the words Exchange Traded Fund, let's start with the word fund. Check it out. While a traditional stock represents a share of one specific company like Apple versus Google versus Amazon, with an ETF, imagine a fund that includes stocks of all three of those companies, so a basket of these tech stocks. And to keep it short and simple, this fund is named AGA, or AGA, because it's a mix of a basket of Apple, Google, and Amazon. Cool. Now for the exchange-traded words of ETF. To allow other investors like us to own shares of this fund, it is listed on an exchange like Fidelity or E-Trade, so we're able to buy and sell and trade shares of AGA. So with this AGA or AGA ETF, it allows investors like us to get exposure to all three companies without having to buy individual stocks from each company separately. This means we can basically invest in the AGA ETF shares the same exact way we would invest in any other regular stock on an exchange, because this fund has shares that can be traded on an exchange. Reorganizing these words is where we get the term exchange traded fund. Pretty simple, right? Sweet. Now let's quickly touch on the differences between futures versus short versus spot ETFs, and then explore the implications of the approval of a spot Bitcoin ETF. Hello, I'm Crypto Casey, and in this video we are going to explore what a spot Bitcoin ETF is, the implications of it being approved, and how Wall Street, the Fed, and United States government will try to use it to take complete control over Bitcoin and the cryptocurrency markets at large. Let's hit it. Please be sure to check out our sponsors, iTrustCapital, Heatbit, and Tangem Wallet. Buy, sell, and trade cryptocurrencies as well as silver and gold tax-free with your own IRA or individual retirement account, or roll over your current 401k with iTrustCapital. Passively invest in Bitcoin while warming and purifying the air in your home or office with Heatbit Mini, a space heater that is also an easy-to-use Bitcoin mining rig, which we explore together in this video. And invest in your very own cold storage hardware wallet like Tangem Wallet. Their new Tangem Wallet is out now with a ton of cool new features. It has a sleek black matte design, is the size of a credit card, multi-currency, multi-chain, and it's by far the easiest crypto wallet to set up and use on the market right now. And it's extremely affordable. So scroll down and use the links below to access the correct and official sites as well as redeem any special offers they have for us. Sweet. What is a Bitcoin Futures ETF? Futures in the realm of ETFs refer to futures contracts, which is simply an agreement where a buyer and seller agree to exchange a specific amount of an asset on a specific day for a specific price. So a Bitcoin Futures ETF is a fund that holds contracts that are linked to the price of Bitcoin. And it's important to understand that they do not actually hold any Bitcoin. So basically using a Bitcoin Futures ETF, we can buy, sell, and trade contracts that dictate which specific day at which specific price a specific amount of Bitcoin will be bought or sold. And what this does is give big institutional investors that are otherwise not completely in the clear to invest in Bitcoin the ability to get price exposure to Bitcoin through futures contracts. Nice. Next, what is a short Bitcoin ETF? A short ETF, also more commonly known in the finance realm as an inverse ETF, is a fund designed to profit from a decrease in the value of an asset. Investors use this type of ETF to hedge their overall portfolios, and it's similar to taking a short position on the future price of an asset. However, it doesn't require the investor to hold a margin account, which is required when trading and shorting positions. So the Bitcoin Short ETF is a way for people to potentially make money when or if the price of Bitcoin goes down, which can be used to also hedge their overall investment portfolios. Amazing. Now for the spot ETF. What is a spot Bitcoin ETF? The word spot or spot price means the current market price. So a spot Bitcoin ETF is a fund that allows investors to buy and sell Bitcoin at the price it is at that moment in time. And in this case, the fund actually buys, sells, and holds Bitcoin, which would allow investors to hold Bitcoin without having to manage it with their own wallet. So the ETF would be a custodian for investors' Bitcoin. So why is this a big deal? Well, there are a ton of people with a ton of money held with their legacy finance and retirement accounts on Fidelity, Charles Schwab, and similar. And a spot Bitcoin ETF would be a regulated, stable way for all of these people to gain price exposure to Bitcoin in their investment portfolios. And this would open the floodgates of a ton of money that's been on the sidelines waiting for more regulatory clarity. Because the SEC granting approval of a spot Bitcoin ETF would be enough clarity to allow any person, institution, retirement account provider, etc. to pretty much invest in Bitcoin on the stock market. Right now, you'd have to open up an account with a dedicated crypto IRA provider like iTrust Capital, which you can check out by clicking on the link below, or by opening up accounts with crypto exchanges like Coinbase or Kraken, which a lot of people with retirement accounts simply are interested in messing with, at least for now. And they would also have to take time to figure out how to set up their own crypto wallets, which can be complicated for a lot of older people with a lot of money invested. So a spot Bitcoin ETF is designed to allow more people to invest in Bitcoin without the hassle of actually buying it, and eliminates the need for additional security procedures because the fund would custody the Bitcoin. So as you can see, traditional investors are very familiar and comfortable with ETFs, and one that would make investing in Bitcoin as simple and straightforward as any other stock or ETF allows money to flow into the space without people having to take time to learn about blockchain, wallets, mining, keys, and everything else. Cool. So why has the SEC approved legalized gambling of the future price of Bitcoin, as well as betting via shorts that the price will decline, but still hasn't approved this simple, straightforward spot price investment vehicle for Bitcoin? Well, way back in June of 2022, we discussed how it was seeming more and more like the SEC was waiting for its traditional banking buddies to get ready to compete in the spot Bitcoin ETF space before granting approval. However, with BlackRock's, the world's largest asset manager, and other big Wall Street players like Fidelity, slated to be the first to market with a spot Bitcoin ETF, is there an even crazier potential outcome on the horizon, besides for controlling fiat on and off ramps to crypto in the US? Oh yes, and it's wild. Let's break it all down after a quick word about Coinbase. Coinbase, the sponsor of this video, is the largest publicly traded cryptocurrency exchange for beginners, and now has an advanced trading platform with highly competitive fees and deep liquidity for sophisticated traders all around the world to use, called Coinbase Advanced. Coinbase Advanced is easier than ever to access right on the Coinbase website and Coinbase mobile app. It's a great platform for advanced traders who perform their own technical analysis and want to access powerful tools to execute their trading strategies, from scalping to API trading. Place limit and stop limit orders, or utilize indicators, or perform technical analysis on advanced price charts powered by TradingView. Check it out. Simply log in to your Coinbase account, click on the profile button in the top right-hand corner, click Advanced, and click this drop-down button to choose from their huge selection of over 550 cryptocurrency spot pairs, like Chili's. And here we have an advanced price chart, depth chart, order book, trade history, and the ability to place limit, market, and stop limits, all in one clean dashboard. To place a limit order, click Buy, Limit, enter the price you want the order to execute, choose the amount, and click Buy Chili's. Simple as that, just by taking a moment to learn how fast and easy it is for advanced traders to start using Coinbase Advanced for trading, whether it's performing technical analysis and more. So sign up and log in using the links below to check it out, and to learn more, go to advanced.coinbase.com. Sweet. All right, now let's explore some interesting scheme that may be at play. Check out this tweet by Chris Black from a year ago that outlines a prediction with an extremely interesting timeline of events. BlackRock first runs the first and largest Bitcoin ETF, then it becomes wildly successful. Next, BlackRock heavily funds Bitcoin development, and later proposes a regulatory and eco-friendly proof-of-stake fork of Bitcoin, which loses community opinion, but adopts the new fork as Bitcoin anyways, as most governments do, leaving the real original proof-of-work Bitcoin just for pirates in El Salvador. Well, so if any of that didn't make sense, basically BlackRock could be big and powerful enough to make a copy of the current Bitcoin blockchain, reprogram it to suit their agenda, and spin it off to the world as the new compliant version of Bitcoin, which they completely control. And then have the government outlaw the open, neutral, free Bitcoin blockchain that was originally created for the people, that cannot be controlled by a single person, company, government, or entity. Yeah, that's not good. And what's worse is, as much as it sounds like a conspiracy, here is a hidden gem in the BlackRock ETF filing. In the event of a hard fork of the Bitcoin network, the sponsor will, if permitted by the terms of the trust agreement, use its discretion to determine which network should be considered the appropriate network for the trust's purposes. and in doing so may adversely affect the value of the shares. There is no guarantee that the sponsor will choose the digital asset that is ultimately the most valuable fork. Yikes. Also within the purview, in true TradFi fashion, BlackRock would be able to dictate who is allowed to redeem Bitcoin, as well as how much. And interestingly enough, Chris Bleck may have also called that in this tweet a while back. Medium-term attack vector. 1. US Bitcoin will hard fork Bitcoin to a proof-of-stake chain. They'll call it Bitcoin. Validators will be whitelisted if they meet certain regulatory requirements. The 21 million Bitcoin cap will be removed. All on and off ramps for Bitcoin proof of work chain will be nuked and replaced with on and off ramps for the new fake Bitcoin proof of stake chain, where you'll get a 25% redemption rate on the proof of stake chain for each Bitcoin from the non-government proof of work chain that you sell to the government. So 1 real Bitcoin would be equal to 0.25 fake Bitcoin. Crazy. Does this mean Bitcoin is doomed? No, it just means that it will be harder for people in the US to invest in the real Bitcoin and transfer it to hold on their own cold storage hardware wallets. In this elaborate scheme, the government would basically be stealing real Bitcoin at a discount from us, similar to how they stole gold from us and banned us from owning it a few decades ago, all in an effort to amass more Bitcoin than other competing global powers, because I think they know crypto isn't going anywhere. Another possible outcome we discussed a few weeks ago is that Gary Gensler was waiting for some modifications to the spot Bitcoin ETF that would basically allow Wall Street to suppress the price of Bitcoin by creating an artificially higher supply of Bitcoin that meets real demand, just like how the gold market works. Check it out. BlackRock modifies the structure of its spot Bitcoin ETF to allow authorized participants, mainly Wall Street banks, to create new shares in the fund with cash, allowing them an exposure to Bitcoin even without a license to own cryptocurrency directly. And all along the same lines this week, First Trust seeks SEC approval for Bitcoin Buffer ETF. The fund is designed to participate in the positive price returns that provide exposure to the performance of Bitcoin. Okay, so what does this all mean? Why would this likely result in the suppression of the price of Bitcoin? Well, we explore this in more depth in this video guide you can check out by clicking on the link above. And just a recap of it for understanding the implications of these recent developments with Bitcoin ETF filings, let's break it down together. Bitcoin was created to be a retail asset for the people, where we could completely control and truly own this new, unique form of property. But in recent years, it has been corrupted by traditional mainstream financial markets and continues to be evident from this week's new developments. Surprise, surprise. So when demand for an asset like gold, real estate, or Bitcoin is high, and the supply is low, we see the price of the asset increase. When the demand is low and the supply is high, we see the price of the asset decrease. But there's something very interesting going on here in the case of Bitcoin. Check it out. Wall Street is treating Bitcoin the same way they treat gold, except it's extremely important to realize that in the scenario of gold, Wall Street and the banks have the gold market cornered and can largely control both the physical gold and paper claims to gold, for now. So the long and short of it with gold is that there are more paper claims to gold than actual physical gold secured in vaults for investors. So just like with gold, there are currently more paper claims to Bitcoin than actual Bitcoin in circulation. How's it so? Well, with the way centralized exchanges work, and with the introduction of leverage, margin, and futures trading in ETFs in the cryptocurrency market, basically Wall Street and big institutional investors are applying traditional debt-based financial practices to an equity-based asset. And instead of Wall Street owning, operating, and controlling the supply of Bitcoin, in the event of a run on Bitcoin, there is absolutely not enough Bitcoin to fulfill real demand, because most Bitcoin is actually stored in wallets off of exchanges, out of circulation. So what does this mean? Basically, for every actual Bitcoin that exists on the blockchain, 10 people, 50 people, hundreds of people could have a claim to that same Bitcoin through an ETF, lending, borrowing, leveraging, or simply by leaving their Bitcoin on the exchange. And what was great about the spot Bitcoin ETF is it was going to force institutions to buy and hold actual Bitcoin for every investor that invests in the fund, therefore decreasing the available supply of Bitcoin on the market over time. But now with these modifications to ETF applications, it would allow Wall Street to essentially dilute the supply of Bitcoin by artificially inflating the supply to meet real demand. And with other recent developments, like the SEC potentially forcing cash create Bitcoin ETFs, would cause us to pay more unnecessary taxes, and like the previous scenario we discussed, could end with an attempted ban on self-custody crypto wallets. And the only way we can buy Bitcoin legally is through an ETF. And when we need to cash out we pay capital gains taxes, and the only way to cash out would be in the form of a CBDC or central bank digital currency, where basically we could not have any control over how, when, where, or even if we can spend our money, because it would be completely controlled by the government. Which, if you would like to learn more about how a CBDC would be the ultimate form of enslavement, check out this video guide by clicking on the link above. This is why it's so important to make sure we are transferring our crypto off of exchanges to hold in our own cold storage hardware wallets like Tangem Wallet. Seriously, it takes like 90 seconds to set up the wallet and secure it. And then it takes another 60 seconds to transfer the crypto to it from the exchange, safely and easily. Awesome. If you would like to learn more about Tangem Wallet and how it works, check out this video. If you would finally like to understand how crypto wallets, addresses, and private keys work, check out this video. And to get your very own Tangem Wallet, click on the link on the screen. Like and subscribe for more. Be safe out there.